Last week's 0.5% reduction by the Bank of Canada meant immediate relief for those with variable rate debt. But fixed mortgages are primarily influenced by the bond market, and it barely budged.
Doesn't really swing bond yields because it's already been priced in.
One thing that can sway the bond market, and by extension fixed rates, is the U.S. presidential race.
Bond investors are also very reactive to perceived risk. There's a lot of sentiment at play in what happens with the bond market. And right now, there's a lot of uncertainty coming out of the United States.
Polls suggest Harris and Trump are neck and neck, but bond investors are already starting to price in a Trump win.
What is that going to mean for spending and for trade agreements and inflation?
Canada would take an economic hit if Trump makes good on his pledge to slap a hefty 10 or 20% tariff on items coming into the U.S. Frustration over the American economy is widespread.
I voted for Trump last time. I'm going to do it again. The economy sucks at this point.
Yet the data paints a picture of surprising strength since September. Bond markets no longer expect the U.S. Federal Reserve to slash interest rates by quite as much as they did this summer. Experts say we shouldn't expect fixed mortgage rates in Canada to fall much further, barring any major economic surprises. One way to hedge your bets is to lock in a mortgage rate. Think of it as peace of mind over the next quarter.
Even when there's a lot of volatility happening in the marketplace and fixed mortgage rates might go up, maybe they'll go back down, that removes a little bit of that uncertainty.
And Gaviola, Global News, Toronto.